The life insurance bell curve is a helpful way to understand the different types of life insurance available, how much to have, and when to purchase them. So why life insurance? Well, the death benefit on a life insurance policy will get paid out directly to your beneficiaries tax-free. But in addition to that, it's going to avoid probate court. So in this drawing, we'll talk about the different types, when to use them as measured in time and age on the bottom, and then also the amount of money needed at death. So everyone has an inherent need for life insurance, and that's to cover your final expenses. And these include burial costs and medical bills. The typical funeral costs about $10,000 to $15,000. So after that, as you get older, you may go to school, college, take out student loans, start a family, have kids, buy a house. So the need now goes up considerably because there are now other people in your household that are reliant on the income that you bring in. But eventually, the kids will grow up, your debts will be paid, the house will be paid off, and you'll build up enough savings and eventually retire, where the need for insurance goes down. So you will have a high point, and that may last for 10 to 30 years, depending on how old you are when the curve begins. And this is what we call your temporary or your term need. So let's say your curve begins at 30 when you first get married or have a child. It'll peak at 50 and taper off at 70 years old. So depending on where you are in life, you can buy term in 10, 15, 20, 25, or 30-year increments. There's also other variations, but this is just talking about a straight term policy. So in that number that is required, you may want to think about the cost it might be to raise a child. In today's dollars, it's about $220,000 to cover all their needs, activities, education, vehicles, school supplies. After that, you want to try to pay off a house if there is a balance that they'll be left with, or any other debts. And lastly, but most importantly, is to replace your income, that paycheck that you have coming in every 2 weeks. How long will your family need that? So let's say your need is $1 million. So you'd buy a term policy, depending on how old, for X number of years to cover you during that need. Now, all along, you still have the need to cover final expenses, which is what we call your permanent need. Within your permanent need, there are two general types, that's whole life and universal life. These types of policies, although they may cost a little bit more, will accumulate a cash value. And we know that the cost of everything goes up over time due to inflation, and so do final expenses. So it may very well be $100,000 to cover these expenses for you well down the road. Anything above and beyond $100,000 becomes wealth transfer. And this is how we can transfer money efficiently, tax-free, to the next generation using a permanent type of policy. So more on the different types of insurance we talked about. The first was term life insurance. This will allow you to buy a lot of insurance for a little bit of money. It provides inexpensive coverage during a very high need for life insurance. The next, under permanent insurance, were two types, that's whole life and universal life. And these might cost a little bit more than term, but they're going to build a cash value, and they're designed to be in place for as long as you live. Now, if you can't quite afford to do a whole life or universal life, you will be able to convert a portion of your term policy, assuming the insurance company lets you, to a permanent policy. And that will begin to accumulate cash value and take care of your permanent needs. So in summary, ideally you want to have both types of insurance, temporary and permanent. And also you want to set it up while you're young and healthy and take advantage of your age and health. So now you should have a better understanding of the different types of life insurance and when to have them. I appreciate you watching the video, and stay tuned for more finance drawings.